So I think it's safe to say that there's been a lot going on in the world of precious metals. Interestingly enough, the bulls are starting to approach out of the woodworks and the bears starting to retreat into hibernation. But as the saying goes, if you poke that bear, you're going to get your finger bit off. Welcome, silver stackers across the world. I hope you are having a beautiful day. If you're new, I hope you subscribe. I'm always going to give you the scoop and keep you in the loop in the world of precious metals. We have a very bullish article we're about to break down titled "A Big Bounce Back in Commodity Prices is Coming, and Are You Ready?" I haven't even read this article yet. I wanted it to be natural and fresh and raw on video while we both go through it together. But we also have another very important article titled "Silver Slide May Finally Have Stopped as Prices Climb Back Above $21." Now, this article was written 8 minutes ago. When I say I'm going to give you the newest, latest, freshest information, I'm not kidding about that. I'm always going to try to update you guys on a daily basis so you're kept in the loop. So let's go over the chart real quick. This is the 1 week chart. So you could see prices almost broke in mid-20s, and if it would have broke below $20, just that psychological number would have been bad. Just like at the store, they're going to mark something $19.99 instead of $20, because just seeing the number 19 makes a big difference. So after an explosive start to the year, commodity prices pulled back this month as traders exited profitable positions to offset losses in other asset classes by a hawkish tilt in central bank policies. Most commodities actually outperformed silver. Silver was the one that kind of lagged behind, but regardless, a lot of people, they sold. So commodity market fundamental analysis. Earlier this month, the Federal Reserve wrapped up its highly anticipated May meeting with a 50 basis point increase, the biggest and most aggressive interest rate hike in 22 years, in what can only be described as a belated response to the fastest rise in inflation seen in over 41 years. There's no denying it that the Fed is caught in a box of its own making because it didn't move quickly enough on raising rates last year. Now it has to be seen to move aggressively, which ultimately means stagflation is now a major risk to the economy, or worse still, a recession. So historically, the Federal Reserve has never been right on monetary policy and has proven track record of setting the economy up for an even bigger crisis. It's almost like we'll deal with it later. It's almost like trying to pay off a credit card with another credit card with another credit card. It's like trying to get yourself out of debt by replacing it with more debt. But at least for the meantime, you're cool, right? If you can, which I don't think this works, pay off a credit card with another credit card, at least right now, you're still okay. But what's going to happen in a year from now? Well, right now, if you're cool, really doesn't matter. We'll deal with it later, right? So historically, they've never been right on monetary policies. And I wanted to bring that up because every fiat-based system throughout history has collapsed. It lasts about a century. Every single one. That's because it's designed to fail. As soon as we got rid of the gold standard, sayonara, right? Our money's not backed by anything. It's not sustainable. So let's look at this. This is a really important article, and I'm glad that they bring these points up to explain why there's commodities across the board are inevitably going to push higher. Only time will tell if the Fed is right or on the verge of yet another major policy error. However, one thing we do know for certain is that global equity markets tend to get crushed once the Fed begins raising rates, and this inversely presents huge bullish tailwinds for the entire commodity sector, ranging from metals, energies, to soft commodities, as they were viewed as one of the most reliable hedges against economic risk, inflation, and recession. So looking ahead, more big moves could be on the horizon amid heightened concerns that the Fed won't be able to deliver a soft economic landing. Federal Chairman Jerome Powell will speak on Tuesday and is expected to confirm that the Fed will stick with a half-point interest rate hike in June, July, and possibly September. Elsewhere, Shanghai, China, which has been under lockdown for more than 6 weeks, will start to reopen on Monday and gradually return to more normal life from June 1st. Expectations are running high and that the oil market may see an identical V-shaped recovery in demand as seen in 2020 when China ended lockdown. That event triggered a historical bull run, taking oil prices from sub $40 a barrel in April of 2020 to a decade high of $130 a barrel in April 2022, racking up a phenomenal gain of more than 425%. Whichever way you look at it, in the case for commodities in a well-diversified portfolio has never been more obvious than it is right now. And yeah, it's a no-brainer, right? I mean, precious metals are a safe haven, but people only turn to safe haven metals when it's convenient, when in reality, the inevitable is gonna stay inevitable. It's not just like, oh, this can get fixed or even has potential to get fixed, right? I mean, and that's why a lot of people that do invest in the precious metals are people more level-headed that do see the impending doom of our, financial system. So silver slide may finally have stopped as prices climb back above the $21 level. This was written 8 minutes ago. So after a painful month for silver that saw its price plunge from nearly $26 an ounce to below $21 an ounce, the metal is finally showing signs of having found its bottom, with the price now climbing tentatively above back $21, which that is extremely, extremely important to look at. There hasn't been a substantive change to the trading environment, with the Federal Reserve Chairman Jerome Powell reiterating that the U.S. Central Bank will continue to raise interest rates in June and July. So now we're going to look at a live chart of the silver prices. This is the 1-day chart. You can see that this red line here is showing that threshold that it's trying to stay above. The resistance level is what it's trying to break above, and the support's what it's trying to stay above. Usually if it breaks above the resistance, it goes into overbought territory, meaning a correction will usually happen within the next week or so. If it breaks below the support level, it's going to plunge a little bit, going into oversold territory, but then it does correct. And those two parts are where people lose the most money, because when it breaks above the resistance level, everyone's hyped about it because the prices are rising, but a correction is about to occur, right? And as soon as that correction happens and the price goes back down, they panic sell. And the same thing with the opposite. When it breaks below the support, everyone starts panic selling because they think it's going to drop forever. Then it corrects and they just sold at the worst price possible. So this hawkish environment has seen silver punished consistently, but it has now found a level where investors have the confidence to support the asset once again. And you never should need confirmation or validation or any type of proof to have confidence to support the asset. I mean, that's just so silly. That's not a real investor. You're only hopping on board when you have proof, and you need to understand how the markets work. You don't need to see a price or see the charts to say, oh, okay, I see. That's not investing, that's gambling, right? Investors make strategic decisions based off information, given the information with the Federal Reserve, with the dollar index, with everything happening in the world. It all points towards higher silver prices and the inevitable collapse of the dollar. And that's not even talking about scarcity or any of that side of things. So while the fundamental case remains strong for silver, the likelihood of interest rate rises over the next coming months on both sides of the Atlantic hasn't allowed that case to be heard. And for now, silver holders can breathe a sigh of relief that the losses may finally have paused, but the road to recovery back to $25 still has a lot of bumps ahead, has a lot of bumps in the road. And I mean, of course, right? I mean, it's just not going to just jump up to $21. And if it did, that would be extremely dangerous, right? The prices can't just go up, 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 or then they're going to crash, crash, crash. It needs to go up a little bit, down a little bit, right? Let's say up to 22, then back down to $21.60. Then it goes up to 22.90, and then down to 22.30, and then it jumps to 23 something, and then maybe 24, then back down to 22, because then it's building stability, right? It's building stability at those price levels. But if it just goes from 21 to 25, there's no stability in the middle, so then it's going to crash, and usually harder than the original price. And that's why, like in 2016, Bitcoin went from $1,200 to $16,000, and then it crashed, and it took 3-4 years to recover because it just went straight up, right? If it would have slowly, gradually been going upwards, building stability, then it probably would still have lasted, but it didn't. So, and just like $50 silver, both times, 1980 and 2011, it just went straight up. There was no stability, and that's the most important thing. So, anyways, I'm just curious what you guys think of this. Do you think that the commodity markets are going to start recovering like this? This is such a bullish title, right? Silver slide may have finally stopped as prices climb back above $21. And actually, it's this one. It's this title that's really bold. A big bounce back in commodity prices is coming. Are you ready? I like how they said is coming, not might be coming, right? They're just like, yo, it's going to happen. It's inevitable. And it's interesting. Another good point is that sometimes these articles just come from a very short-term perspective. And sometimes, when I talk about silver prices, rising, I'm talking about a medium to long-term perspective, because the short term is pretty much irrelevant if you're a true silver stacker. I'm talking about the person that's just buying physical metals and are going to sell in 10, 15, 20 years, right? I mean, there's no point to really be concerned about the price for the short term unless you're planning on selling, which you shouldn't be doing anyways, or unless you're trying to enter the market, lower your dollar per ounce average. Then you could pay attention to the price. But besides that, it makes no difference. You don't need proof or validation, because that just means a lack of faith and really just going off of hype, especially with all the speculation that affects and influences the price of silver nowadays. That's just not a good way to invest, right? Invest with your head, not your heart. So yeah, I'm gonna wrap this video up here. If you thought this video was 1, enjoyable, 2, informational, 3, educational, 4, at least entertaining, make sure to hit the like button. I post daily videos. Make sure you're subscribed. It's really important, not for my sake, for your own, because I will always give you the scoop and keep you in the loop in the world of precious metals, more specifically silver. This was Silver Slayer. Thanks for tuning in. I'll see you guys soon. Peace.